All right, good evening, everyone. This is Daniel from Tradecraft 360, and I'm going to be detailing a follow-up trade to AppLovin. And so that was one of my prior videos that I put out, and that detailed the trade on AppLovin. That was on Friday, December 6th. And what happened there was I sold the 410 put for $14 and change, and then in the after hours, I hedged off risk by basically short selling 3,000 shares in the after hours, and then took on the after hours risk. And fortunately for me, AppLovin sort of deteriorated further, and then obviously I was assigned the shares, and that sort of closed itself out for the gain. And interestingly enough, that was the start of the decline for AppLovin. Not necessarily a permanent decline, but a break nonetheless. So it sort of began in the after hours on Friday, and then on Monday you had the gap down, and that's when I elected to initiate a new long position on AppLovin. I think it was down about 14% when I initiated the trade, and I purchased 3,000 shares. And it's a bit convoluted here, so I thought I'd just detail this in my execution history, ignore all the many other trades that I put on, because I am an active trader. This is these videos sort of encapsulate a small subset of what I do in the market, and I'm always doing something. So let's see here. Yeah, okay, let's start right here. All right, so as you can see, this was on the December the 9th, so that would be the Monday, and I bought to open 30 contracts, and that's $20 a contract. So it's a cool 60,000 US. How about that? And then I bought 3,000 shares at an average purchase price of $344.57.21. AppLovin surged higher, and then subsequently started to sell off towards the close, and I thought that didn't portend well, and the more likely probability was a break lower. That's usually how these things go. You have the gap down, dead cat bounce higher, and then a retest, and I kind of missed the opportunity to get out a little bit higher, but I did get out, and as you can see here, this is right here, I got out. 1,500 shares there, 1,500 shares there. So now I just have the put, right? So now I'm technically short AppLovin. That's one of the reasons I do separate my calls, purchasing calls, and separating out purchasing puts and buying the underlying from the calls. It allows you to separate out a liquid security. So usually the security itself is more liquid than the options market. And in this case, with AppLovin, I didn't want to take the chance that the option market might widen, or who knows. So I actually ended up purchasing the security and pairing it with a put. Oftentimes I'll just use calls, buy a call, as opposed to doing that. But in this case, I'm actually happy that I chose to buy a put and pair it with the underlying, simply because it allowed the liquidity to exit the position rather easily, keep the put on, and then the next day it gapped down again, or I should say it gapped up, and then it sold off. Sorry, I have to double check that price action, so I apologize if that's not quite correct. But in any event, I did end up buying it lower, so I bought here. So I was just sort of day trading around. So I bought 1,500 shares here, and then I sold 500, and then I bought another 500, 500, 500, and then let's see here. Yeah. So bought 1,500, then sold the 500, and then bought another 500, 500, 500. So that would put me at 2,500. And I wanted to reserve a 500 shares in case there was further price deterioration, which actually there was, but because of time zone issues. I'm on vacation, but I wasn't able to purchase the other 500 shares when it gapped down in the morning. In any event, my average purchase price was $326 and change, with the put costing me $20 at a strike of $342.50. You do the math, you can easily see how this was a good entry point. So I'm already, just by purchasing below the strike, I locked in that gain, and that substantially covered most of the cost of the put of $20. And currently right now there's only about $4 and change left to cover on the value of that put, the initial outlay. And I've got till December 27th, so now I can have some fun, right? So that's the whole point of this, is that cover the cost of downside protection, or cover the cost of the call, and do that by any means necessary. If that means liquidating the position to buy in lower, or if that means putting on a ratio, or if that means utilizing calendars, by any means necessary to cover the initial capital outlay, then that's what you have to do. And in this case, it was just fortuitous that you can recognize that there's the gap down, there's the reflexive bounce higher, there's the sell-off into the close, there's the gap down the next day, and that allowed for a re-entry, so better trade location. So that's something that's you always have to be mindful of, is where your trade location is, and try to secure the best trade location. It's not always possible to or wise necessarily to be in and out of positions, but in this case, this one was a little bit more obvious to me, and I was able to secure a lower price point. And so from now until December 27th, I can do a number of different things. So if there's another gap up on AppLovin tomorrow, I might take some money off the table. So I still have these $15 contracts for this Friday at $2.20. And then there it is. And then another 10 contracts for next week, Friday. So I'll be monitoring the price action, and hopefully allow those calls to expire for this Friday, and then set up for next week. And interestingly enough, I can probably get a much higher price point depending on what happens today and tomorrow. Maybe it surges a little bit higher, maybe it stays around where it is. It's hard to know. I know I did put on a short on the QQQs, but that was only to express a very narrow opinion. So I could easily just close out that short by tomorrow. If there's a gap down, if that affects AppLovin, is hard to say. Sometimes it's these types of securities will do their own thing. It doesn't necessarily have to be correlated to the broader market. In any event, what I'm going to be waiting for is the price action. And if what's interesting about this is that if I do not get called away on the 15 contracts that I sold for this Friday, then I set up for next week Friday, and I could probably secure a price point higher than the $5 here, and then I'm already making money on this trade. And then I can sell into the week of the 27th. And usually, maybe the Christmas rally kicks in, who knows. In either event, kind of an interesting, if a little bit disjointed trade, a lot of moving parts. It's not too hard to follow, in the sense that effectively what I was doing was trying to secure the best trade location. I separated the underlying AppLovin from the puts that I purchased, and then I staggered my entries, which is why you'll see, the 500 shares or the 1,500 shares. I was just, staggering, entering in slowly, and not all at once, just to see if I could get a slightly better price point. And that turned out to be the better move. And now, because I'm in a better trade location, and most of the value of the put or the cost of the put has been covered. Now I can look to the upside, not worry too much about the downside, and try to see if AppLovin can, again, retest its all-time highs. I'd be interested to see if it can do that. And certainly if that were the case, I would make not an inconsequential amount of money on this particular trade. And I do like these types of trades where you have a high flyer, lots of momentum, gap down, but that doesn't necessarily portend doom. It's just scary when it happens and people can get shaken out of their positions. And that's why the put is helpful, or just buying a call is helpful. It, again, allows you to control your emotions. So I won't belabor the point any longer. Hopefully this kind of makes sense. And I will update over the coming week or two on how this trade unfolds. And hopefully I have some good news. And maybe I can get to 6 figures on this trade. That'd be nice. Merry Christmas, right? All right, everyone. Have a great rest of your week and happy trading. Take care. Bye-bye.